The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 6th fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Hey, if you can't dial in, well, then let those fingers do the walking. Go ahead and send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on Masters Friday. How cool is that? Tiger Woods even has his own countdown clock on ESPN. He's kind of like the Jobs Report. Well, anyways, let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. A Tiger and a Tiger. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow trading down 359. S&P's off 31. NASDAQ down 72. NDX 100 is what I should say. Russell 2000 off 16 points. So everything a point, 1%. The Dow's actually 1.5% right now. The semis are off 17 bucks. New York Stock Exchange down 1%. NASDAQ Composite off 1. Wilshire down 1. Transports are down 1 0.8%. That's the 194 points to the downside. 10,260 is his number. 1833. That's how many minutes we've got until Tiger tees off on number one. Willie, what's the bet? How many of you think he's going to par number one? And how many of you think he's going to get a bogey on number one? Number one, very difficult hole out there at Augusta. Right now, still on hold on a freeze is Longfin Corp. So, but leading the charge here to the upside, you've got PriceSmart up $6, 7%. That is 18% to the upside for Pacira Pharmaceuticals. Spotify up 2.5% or $3 and change. Essex Properties up $3. Intercept Pharmaceuticals up 2.5%. To the downside, it is Booking Holdings down $25, a little over 1%. Amazon down $19, 1 3/10% to the downside. Insight Corp down $15, that's 18%. AutoZone off 13, BlackRock down 12. So we've got a few things to look at. Of course, I want to look at what you want to look at. Mr. Bill, he's got the vote out there. He says that he always has trouble with hole number one, as does most of the field out there. So he's got Mr. Bill's got his vote in there for bogey. Yeah, you know what? If he can par number one, he's going to feel like he got a birdie out there, Mr. Bill. I think he'll feel like that. All right. So what do we want to take a look at today? Let's take a look at market breadth. Let's just start there. And as we speak right now, let's start with the S&P 500. Not for any reason other than just we're going to start with the S&P 500. We can see that still, as we speak right now, it is the bears that are in charge of the market, meaning that we have more S&P constituents trading below the bottom of their boxes, that'd be 152, versus those trading above the top of their boxes, that would be 95. So it is still sellers that are in control of this market inside the S&P 500. Well, that is going to be the same case here for the NDX 100, although this is going to be a bit more, what's the right word to use out here? Worse, right? We can see that you've got 10 issues trading above the top of their box versus 36 below. So you get 9% above the top and 33% below. So you have market breadth bearish inside the NASDAQ 100, inside of the S&P 500 out there. So what does that mean? It means there is no clear-cut signal that the markets are ready to move higher. How bearish at this stage of the game? Well, it's not good. It is not good from the standpoint, if we go take a look where that spot volatility index is trading right now, that's going to be trading out at 2076. That is above the 50-day exponential moving average out there. It says you got to be careful when we have this kind of setup. What's this kind of setup? Market breadth bearish. Spot volatility index trading above its 50-day line. That 50-day number is 1869. If you close below today, okay, then maybe we have something to talk about. Well, we always have something to talk about. But in this case here, it's not necessarily great news. Inside the S&P 500 as well, let's go check out and see where Stevie's red line is, because price was above it yesterday. In fact, let's go just simply take a look at it. Let's pull up the chart. Got to give me one moment to pull that over out here. So we're going to pull up the S&P 500. We're going to see the price is trading just below Stevie's red line. That's that oscillator and change line tool. 2636.33 is the exact number. We're 2629. Not too bad, but you close below that. What you're getting here is at least more retracement. Could be more. The reason it could be more, you close back below Stevie's red line. We continue to have this falling price oscillator below zero. Now, what would be the cool pattern that could actually set up for us that could finally go ahead and cement a bottom out there? And I think that is a great question. What could that pattern be? Well, one of the patterns that I'm watching for, I don't know if this is going to come to fruition, but if it did, first of all, everybody would be writing about how, okay, that's it, market's over, they're just going to careen to the downside, except for you and I. And that's with regard to the NQ daily chart out here. This market really is all about the NASDAQ. The NASDAQ, believe it or not, it's pulling the strings. Yeah, it is the guy behind the curtain. Could be the gal behind the curtain. In this case here, oh, it wasn't the NASDAQ. I thought we were in wave 5. Well, maybe it was the NDX 100. Well, I'll figure out what it was. But what we can see that occurred here yesterday, which is a very bearish situation with regard to technically speaking. If we take a look at the NASDAQ 100, the NQ daily chart, I'll figure it out. And you watch the price oscillator, bottom panel of our screen, difference between two exponential moving averages, 19 and 39. When that gets down to zero, what you anticipate, I can't tell you why, I just know it happens. What you anticipate is that you're going to see price and Stevie's red line catch up to each other. Doesn't say which day, says we're going to see that. In this case here, that's where we got to yesterday. That is where the rubber meets the road. How cool is that? What do I mean by that? That means that if price tests and rejects it, then that trend that you have been in is going to continue. In this case here, it says you had a falling price oscillator below zero. So, what does that mean? That means you cannot go long the NQs and maybe the market, until we see otherwise. Yeah. Stevie's neutral right now. I'm neutral because there are bottoming signals that are out there. They're present. I don't know who's going to win this game, but it is the NASDAQ that is calling all the shots. Steve Rhodes with TFNN. We'll be right back. There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timer Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So 9 minutes, 5 seconds till Tiger tees up. The group I'm more interested in is going to be to see how Sergio plays. So he's basically out of it as we speak right now after that 13 that he had on hole number 8 yesterday. Yeah, 5 shots in the water. I sort of know how he feels. And but he's a great player. He is a great player. And he can take dead aim. Now, you really can't take dead aim at the flags there, but I suspect he's going to be shooting for birdies on just about every hole because he'd like to be able to play himself back into the tournament out there. Now, I don't know if anybody's below 2 under for the day or 1 under even for the day out on the course. So he's got his work cut out for him, that's for sure. In any event, if we take a look at the market, it's got its work cut out for itself as well. If we take a look at this set of charts here, New York Stock Exchange is on the left. Next to it, the very right, is NASDAQ Composite. Next to that is the Dow, and then next to that is the S&P 500. So New York Stock Exchange, its advanced decline oscillator is still above zero, just slightly, but still above zero. We know that price yesterday and today, obviously, ran into its descending price channel line. That says that could be the extent of the move for right now. That is your resistance level. If, in fact, we see the advanced decline oscillator reading close below zero, you can expect at least retracement of the gains that we've seen this week, or the move from the low of about 5 days ago, 6 days, or whenever that was. Well, I'll tell you what day it was. I don't want to keep you guessing. From the low of April the 2nd, that was this week, right? Yeah, April 2nd, up to the high of yesterday, some type of retracement at a minimum. NASDAQ Composite, we're back below zero on the advanced decline oscillator. So that's not good. That compared to that combined with the resistance test that we saw in the NDX, the NQ, the NASDAQ Composite yesterday, it's not good. At least sets up additional retracement that would be coming at us. The Dow, same type of setup as the New York Stock Exchange. Price runs into resistance or close to it, and it's descending price channel. Its advanced decline oscillator back below zero out here, says more retracement, and the S&P 500, to go ahead and top it off, with that spot volatility index being above the 50-day at 1869, that says more retracement too. That's what it says. Now, how much are we going to get today? Is today kind of just going to be steady Eddie from this point forward? It may. It may. Things will get moving to the downside if you see the Dow equity futures contract, and you can quote me on this, close below 23,989. Just trade below 23,989 and hold it just for a period of a few minutes. Then we'll see probably an A to B equals CD to downside. I don't know that we're going to get it. That is a level of support. It is held. So we may just have seen the lows for the day, no matter the message of the markets right now. But it doesn't seem like anything will get really rolling to the downside unless you see price below that level. Inside of the, I think that's the key level to be watching today. We're just going to go with that one. That one level, 23,989. You see the markets get below that, the Dow is going to make an A to B equals CD to the downside. Could even pull that off today. You might say, well, where would that take you to, Steve? That's a great question. Let me see if I can get my A to B equals CD tool out here. We can. There we go. We just turned it on. So that could give you a price projection. This is a could. I'm not saying it will. I'm saying it's a could. I'm saying it likely would happen if you get below 20. This is nice to have a line of demarcation out here. Get below 23,989. Then we'd be looking at, well, why did it do that? Let's put out the one level. That would get down to about 23,821. That would be about another 170 points. And quite frankly, that would make sense with regard to just simply the average true range. Because if we take a look, what is the average true range of the Dow over the last 10 trading sessions? Dow equity futures contract is 544 points. And what are we? We're down about 400. So all that makes sense. So watch that area. Watch that level. Okay. What else can I share with you at this stage of the game? Silver's flat and gold is up $7. So maybe we should take a look and see what we have there. In the case of silver, let's start looking at silver first. In the case of silver, it is a clear consolidation that is going on. Could not be more clear in your eyes. Could not be more clear in my eyes. This will take us back. And this consolidation, by the way, has been going on since at least, we'll call it at least February the 9th. The lows inside of the market. It was either the 6th or the 9th inside most of the equity futures contracts out here. So that consolidation is anywhere, and we're down at the or near or towards the bottom of that, in the 1620 level. That's the bottom of the consolidation. Top of the consolidation is about 1688. Prices trading above Stevie's red line, albeit just by a penny or two. So you've been to the bottom. Probably silver's going to go ahead and make a run for the top. Just a sideways range. It would be a nice move, by the way, a 50-cent range or 45-cent range to get from 1635 to the 1680. Excuse me, but if you see that happen, just know that you're still inside that consolidation. Now, the cool thing about the consolidation pattern is that if you break out of it, whichever direction, you have a measured move equal to or greater than that consolidation. So that's what Stevie sees inside of silver as we speak right now at 1:24 in the afternoon. Again, in summary, silver trading towards or at or has tested the bottom of its consolidation, hasn't busted it to the downside, therefore should head up over time to the top of the consolidation box. Inside of Goldilocks, we can see that it's got really a consolidating pattern as well. I think it's more clear to draw a down trend line from its highs. Its highs from about the 27th, I think, was it? Let me see. 26, 27, 28. What was that? Let me give you the exact day. You want to be misquoted here. Just January 25th. There you go. If you just draw a trend line from the high of the 25th, then your next touch point is going to be February 16th. You're going to see how that actually went ahead and touched the high of March 26th. So you got three nice touches. You like to have three touches there. And so in the case of gold, it's not clear to me. Actually, it's kind of clear. Unless gold can close up a couple more bucks, by a couple more bucks, the exact number would be 1332.30 or 1331.30. So one more buck. If it can close above that level, then I say you go hit the top of that descending trend channel, trend line, not even a channel line. And what if it can't? Excellent question. Odds favor, you go down and you test the low of this so-called consolidating horizontal support level. Call it the lows out here from March the 20th. At least that's what I'm going to do. And I'll give you a price on that here in a moment, as soon as this cooperates. Doesn't look like it wants to cooperate. There we go. 1306.60. 1306.60. So not doing a whole lot. No reason to get too excited about what gold or silver is doing here. With regard to the mining equities, you've got the GDX up 19 cents out here. You just can't expect the mining equities. Well, you can expect anything you want. I'm thinking you can't really expect the GDX mining equities to really do a whole heck of a lot here, with gold and silver just really trading sideways. Maybe best to stay out of that game till it decides what it wants to do. Got light sweet crude back $1.14. She's trading out at 62.39. Dow's off 391. Tiger's just getting ready to tee it up. See how he can do on that opening drop.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 351. S&P's down 29. The best shot at Augusta this entire weekend already has been put in. That was the hole-in-one that Jack Nicklaus's grandson, Gary Jr., actually made on the ninth hole of the par 3 competition. His first hole-in-one ever, age 15. And as Tom would say, that's a beautiful thing. How cool is that? So it looks like Tiger's got it down the fairway on hole number one. So first thing accomplished. Let's see if we can stick it on the green. Going to be laser focused. And then even back to these markets here. Well, let me check the email, see if anybody has written in. I think everybody is either watching Stephen Mnuchin, wherever he might be talking, and trying to talk the markets up, I suppose. But he can't look, the negative signals that we saw, it's at least inside the NQ yesterday, had nothing to do with the tariffs. I mean, it was just the way that the market closed. You had test and rejection and said, not so fast out here. Been a heck of a week for. Speaking of, has it been a heck of a week for trading? Let's just go take a look at what the weekly chart actually looks like. We get rid of some of the news. By the way, in order for the Dow to get some legs, it's got to close over 24,719. 24,719 is an important level. But let's take a look at the weekly time frame chart out here. Let's not. Let me see here. So what you've got is the Dow would close up just slightly for the week versus where it opened. Okay, not necessarily compared to last week, but where it opened. Let me get rid of this volume here. On a weekly basis, the last 10 weeks, the average weekly range for the Dow is 900 points. How do you like that? Now, that's compared to, for example, back on May 15, 2017, the last 10 weeks weekly range was 324. So we've got 3 times the weekly movement from high to low inside of the Dow. Pretty amazing. If we take a look at what the S&P 500 has done here, probably we'll see the same thing, almost a little doji candle. Does it mean anything at this stage of the game on a weekly basis? No, doesn't mean diddly. For me, for Stevie, dojis only mean something at resistance, so that's up at the highs out there. Let's take a look at the NDX 100. Let's go see what it's done here for the week. Of course, the week's not over. It too has a little doji candle. Now, the 63.9642 level inside the NDX 100. By the way, that level that I gave you inside the Dow, that was the closing price in 2017. Really important this time of the year, which is the favorable seasonal cycle time of the year, April, first half of May, for price to really be trading above where price closed at the end of the year. And in the case of the NASDAQ 100, it still is. So it just all varying degrees with regard to how we analyze charts out here. But look, the NDX 100, there's no other way to say it, but it's given us some very, we got to come up with other words other than just bearish and bullish out here. But it's given you a very concerning signal of a rocky road that could really lay ahead out here. It is the NASDAQ that's going to be the driver. But if that NASDAQ can close above Stevie's red line, and we haven't even looked at that, I might as well give you that number. Let's go ahead and pull that chart over so that you can see that specifically. Now, the NASDAQ is really trying to form a nice little bullish signal here after creating that 3 drive to a bottom pattern. Could not have gotten more beautiful than that out here. This is the daily chart. The number at the NDX 100 needs to close above 660265. That's the number right now. Monday could be a little bit different number. But if you see price close over Stevie's red line, and it does it, let's say, over the course of the next several days out here, what I will share with you is there is at least a short-term bottom that would be in place. And it says that price could rise up to, you could come up with 2 different levels. The first level would be right around the 68.12 to 68.29 area, where there's an open gap. The next level would be right around 69.54 to 7,000 out there. That would be your upside potential. Your downside potential out here, well, the downside potential, which is where it is right now, okay? We've got to call it what it is. And at this stage here, it is a market that is telling you it does not want to do much other than move lower. By move lower, the NDX 100 could move down to 61.15. That would be your 1-to-1 A to B equals CD. I would say that's not really the price target. More likely to be 59.30, something along those lines out there. So right now, as we said when we opened up the show, as we take a look at what price is doing and where it's trading at, you've got bearish tendencies inside this market, meaning it wants to move lower. There is a fight there's a major fight going on with regard to the bulls out here. And believe it or not, it happens to be inside the Dow. The Dow and the New York Stock Exchange are two indices. The Wilshire 5000 will be the other, that gave you the best signal that the market has found a short-term bottom. And it did that yesterday. So yesterday, here's where you have the conflict. Yesterday, you had a clear signal from the NDX and the NASDAQ composite, a clear bearish signal. From the Dow, you had a clear bullish signal. Why do I say that? Because if you're watching us on Tiger TV, you're going to see that price was moving lower with less relative energy. And it did that. It got down to the low of the lows of the trading session from earlier in the week. That was April the 2nd on Monday. Well, in order for this pattern to confirm, what you need to see is some type of bullish reversal signal. Well, guess what we got yesterday? We got a gap to the upside. A gap is our friend, always. In this case here, in fact, a gap is a very bullish signal out there. What is a gap to the upside? Likewise, a gap to the downside can be a very bearish signal. Now, where you can insert the word very is at the completion of a pattern. If you're inside the middle of a pattern, we just say it's a bullish or bearish signal. In this case here, yes, it was a very bullish signal inside the Dow because of that gap to the upside. Today, all we've seen inside of the Dow is a test of Stevie's red line. Now, that red line number inside of the Dow is 24077.92. And if price stays above this, I can share with you that there's not even a question in my mind that the Dow is trying to tell us it formed a bottom. But what you and I have to answer is, who is the stronger of the two indices? Is it the Dow or is it the NDX 100? Is it the Dow or is it the NASDAQ composite? Is it the Wilshire 5000 or is it the NASDAQ composite? Because if we take a look at the Wilshire 5000 out here, you're going to see the same type of pattern. And that pattern is price was also moving lower, doing with less relative energy. For those of you that took Basil's workshop this week, he was talking about, you know, our next requester, which is peak D, only this was trough D, inside the it was inside the Tiger's Den. Hey, peak, you can need another handle too. I think you got to have a peak D and you've got to have a trough D, right? That's what I think you've got to have. And inside the Wilshire, you had a gap to the upside. Now there, you've got price trading below Stevie's red line, 27,358. That's not follow through. But when we get back, we're going to go check out Marathon Oil and CNQ for peak D. We're going to go see what peak it's actually trading at right now. Trough.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So let's go take a look at Marathon Oil, ticker symbol MRO. Let's go do that for Peak D inside the Tigers. And now, Peak, didn't tell me if you're long, you're short, you're looking to get in, you're looking to get out. What you're doing doesn't matter. We're still going to go take a look at what Marathon Oil is doing. Now, I mentioned we would go see what wave count it is in. So let's go do that first and see what it is that we see. And it looks like the lowest low out there, there we go, where they had that little bullish engulfing back here on March the 2nd. Well, just for the heck of it, let's go see what letter that was on the downside. So let's see what did it get to the downside. Oh, got to wave number 5 out there. And let's see, where are we at right now? Oh, hey, how did that work? How did that work? It got to a Peak D. Now, I don't know. You are a Chapman Wave aficionado. You, I'm sure, attended the workshop or have attended many of his workshops. You wouldn't do that and then go ahead and have the handle Peak D out there. So tell me, yeah, so what should you do when you get to this Peak D? Because you're asking, should you buy more? If you're going to buy more and you're going to ask me what price point, I would say you take this thing here at Stevie's red line, 1579, or whatever that red line number is as we get towards that level. And you might ask the question, well, do you think it'll get to that area? And my answer is I do. Now, you would say why, and I will share that with you. We talked earlier about how when that price oscillator gets to the zero line, and you can see we're just below zero, I mean, just by the hair on its chinny chin. What was that tap in for Tiger? Was that a par or was that a birdie? I kind of lost track there. What was that? That was a bogey. Hey, Mr. Bill, you were right. He did bogey the first hole out there. All right, but back to Peak D. So, an extra, he gets an extra chit for sure, Mr. Bill, that is. So when you get to zero, which is very close to getting to the zero line out there, what happens is that the price oscillator, on change line, and price catch up to each other. It's possible that my red line moves higher, price moves lower, some combination thereof. What you want to see happen here, Peak D, if you're looking to get in on this, is you want to see price reject that line. It means touches it, tests it, and then bounces higher. Because what you would have then, or you could have then, is you then could have a rising price oscillator above zero. Is that important? Well, let's pull this stock chart back further. Let's go answer the question by just looking at prior pattern behavior out here. And you tell me, do you want to see a rising price oscillator above zero? Because the last time that Marathon Oil had that type of setup and pattern out here was back on September 21st, 2017. And when that price oscillator got above zero and price was above Stevie's red line out there, well, then that moved higher price to win, till price was moving higher, doing less relative energy. What did it do then? Well, it actually had a gap to the downside that confirmed, okay, I'm now ready to head lower, which in fact is what it did out there. So you're asking, should I buy? You're saying that a peak D can be a yellow light. I would agree with you right now. You have an absolute yellow light using a different system out here that says wait till price and Stevie's red line catch up to each other and then make that decision. All right, my friend? So I know there was another one you wanted to take a look at. What was it? CNQ is the ticker symbol. So let's go do that. We didn't even go look at our other charts. Let's take a look at CNQ with our other tools out here, and we have several tools, and that way we don't bore you. We keep you on your toes at all times. So we take a look at Canadian Natural Resources out here, a stock chart that looks similar to Marathon Oil. Is this one also at peak D? Are you just baiting me? Is that it? And if we take a look at we're going to look at it through a different lens, and we take a look at this equity because we know we had a test of the low. The low I'm referring to is February 9th. 4.4 million shares, in essence, that day, were tested with 3.5. They were tested with 2.1. So we know that it didn't have the emphasis to be able to blow out the bottom. You couldn't bust it to the downside. You try to bust it to the upside. Well, in this case here, that upside would have been the February 28th level, 2.9 million shares to the downside. That was passed yesterday with 3.5 million shares. So, Peak, you tell me, what do you think? I think this is going higher. Higher to where? Well, I would say it's going to at least go to the breakdown of this gap between January 29th and the 30th. That could be one level. It's got the V for victory sign out there as we speak. It could go all the way back to its high. So you agree, I agree. You know, I think that Canadian Natural Resources wants to continue moving higher. That's what the daily chart says. The weekly chart tells us the same thing. It's going to close over the top of its box. Here's what you need to really see, right? In order to go ahead and put the dot on that exclamation point, I don't even know what that means. But what I do know is that if this thing can close above the monthly top of its box out here, that's 33.78, no reason for it not to continue moving higher out there. So if you're inside that trade, hey, nice going. If we had the applause meter, if I could push the button and hit the applause, I would do it right now. But that's what I see in Canadian National Resources. Ruby's thrown up a number out here. She wants to go ahead and take a look at the euro. So can we go take a look at the euro? We can. I'm just going to go ahead, if you don't mind, and put up the euro futures, although I need to put in the actual futures contract. Otherwise, oh my goodness. Let's see if I can get this thing correct this time around. So we're going to go take a look. That way, I'm not looking at any kind of, give me a moment here. Oh, jeez. At any kind of delay. Of course, right now I'm kind of trying to do a delay. This is called a strategic pause while I try to actually fire this up on my other screen out here. And it's just operating slowly. I don't know what the deal is. Maybe it's telling me I need a new computer. I don't know. I'm thinking I'm going to have to break down and get a new laptop, a new desktop out here just to keep up with you guys and gals. All right. So if we take a look at the euro futures out here, and you are your long euro futures. Oh, your long euro futures. Of course, you want me to look at the euro futures. Can you look at it? If not, higher at close. Should I close it? So, Ruby, I always have to ask the question. I don't always have to, but I'm going to. So you got in this trade. Tell me what the game plan was. You know what the time period is. You know, if I can understand your thought process, you know, what I'd like to do is validate that, or look at the other side of the trade, or, you know, whatever it might be. Because when you start to ask me if it doesn't do this today, should I get out today? And I could be wrong about this. It sounds more like it's a real short-term trade, and almost would then say, hey, why am I even looking at a daily or a weekly or a monthly chart for you, right? So, you know, that's kind of what I'd want to do out here. So, and while you're going to go ahead and write that in, I hope, what I'm going to also do is I'll put the continuous contract up here, and just for the heck of it, see what the horizontal trading range boundary lines are. See if we can get this on the daily time frame. So you gave a figure, or you said here, let me go back. What was it? If it doesn't close higher, should you close it? Okay, so when we get back from the breakout here, one thing I'm going to share with you, if this doesn't close below 1.22790 to be exact, no, you don't need to close it. It's just trading at the bottom of its horizontal trading range. By the way, it's closed at that price 149 times. It's a pretty significant level of support. He wrote the TFNN.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petrocurrencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
All right, 2-minute countdown. We're going to go back to the euro in a minute because there was a question that came in earlier, and this is important as well. I want to cover this, and it was how to do proper position sizing. And the way that you do it, I'm going to give you the formula, so that way, if you're just listening on the radio, however, you come back and watch the rerun of this here. We're going to take a look at your portfolio balance. That's the open cash that you have. I'm just throwing in a figure here of $100,000. All you want to do is risk 1% in every trade. So you put 1%. I'm going to multiply $100,000 times 1%. That means my dollar risk on this trade, whatever it's going to be, is going to be $1,000. Then what you need to do is figure out the average true range of whatever it is you are investing in. Earlier in the week, we took a look at the IBB that had a nice hammer candle, test of a swing point on later volume. Right now, the 10-day average true range is 285. So what do? That's just simply taking the last 10 days, top to bottom. What's the average daily range that it trades in? Take 285, multiply it times a Fibonacci expansion number. The more volatile the market, the wider the stop. You can use 1.272 or 1.618 or even 2. In volatile markets, you need wider stops, absolute wider stops, 1.618. So our stop in here on IBB, as an example, 285 times 1.618 is $4.61. Now what we do is we take those two red numbers. We take the $1,000 divided by the stop of 461, tells you we would have 217 shares. You can round it up to 20, 215. It doesn't matter. We're using this as a guideline out there. Stock price is 102 bucks. 217 times 102 is a $22,000 risk. That's 20% of your $100,000 portfolio. It's kind of within the range. Maybe you don't want more than 10% in an individual stock, but inside an ETF like that, that's a sector. 30 or 40% would be okay. 20%, no problem. So that is how you would do a position sizing. Each of you can do that just with a simple calculator. Back to the euro out here. I'm just simply going to go take a look at that primary horizontal trading range. And Ruby, I'm going to say, as long as this thing trades above 1.22790, 149 times we've seen closes at that level, you're okay. And maybe it's going to trade up to the 1.26140. Folks, thanks for being here. Stay tuned. Your favorite polar bear, my favorite polar bear, David White. He's up next. Have a great weekend. We'll see you on Masters Monday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.